President Trump and his Chinese counterpart are in China holding high-level two-day discussions alongside U.S. Top CEOs, but negotiations could extend beyond tariffs and trade relations. The two leaders may also discuss the war in Iran as well as their disagreements over Taiwan's national defense. So that could add some extra geopolitical premium in global markets and some extra volatility. And as we can see, markets today are already are falling quite stable. If we look at the gold, we can see that the precious metal keeps struggling to close above the 4,700 level. It faced the resistance around its 50-day moving average for the second time since mid-April, and that is a discouraging sign actually. And if we look at the technical indicators, those are also lacking positive momentum, but the RSI is still holding around 50, so that keeps a ray of hope that perhaps a rebound cannot be excluded. Nevertheless, if downside pressure returns with the price falling below its 20-day moving average as well, then the 4,600 level could attract special attention. There are two trend lines intersecting around this level, so that level will be closely watched, and a break below it could next target the 4,500 level, where the price found strong support earlier this month. If that fails to hold, then all the attention will turn to the 200-day moving average and the 4,335 and 4,380 territory. Failure to hold here could send a stronger bearish signal, likely suggesting that this bearish pattern could further worsen. Now, on the upside, in the event that we see a bullish breakout above the 50-day moving average and the 4,750 level, then perhaps the price may head towards the 4,890, where the price peaked in mid-April. Then beyond that, a tougher battle could take place around this resistance trend line near 4,985 and 5,020. A successful penetration higher could actually improve the short-term outlook, likely causing another bullish wave towards the 5,190 and 5,230 region. Now looking at euro dollar, well, this is another market that targets a key support territory. As we can see, the price failed to close above 1.80, and instead it reversed lower and is now heading towards the 200-day moving average at 1.6075, where the price found strong support back in April. The 50-day moving average and the 1.6030 region, which coincides with the neckline of this double bottom pattern, could be another protection for the market. However, if the price manages to break this, then the sell-off could accelerate towards the 1.1550 region, where this tentative support trend line is located. I would also pay attention to the 1.15 number, since a break below it could rise us straight to the 1.14 number. Looking at the technical indicators, well, we can see that this is another market that lacks a clear bullish signal, so the risk is also probably skewed more to the downside. However, as in the case of gold, the RSI has yet to move clearly below 50, so that suggests that we cannot completely rule out the bullish case of an upside reversal. Of course, for a bullish outlook, we would like to see a clear move above the 1.1780 and above 1.18 level, in which case we may see another test of April's high near 1.1850. Then beyond that, the price would extend this bullish pattern towards the 1.1925 territory last seen in February, while higher than that, the rally could target an important barrier near 1.20 and 1.2035. This is the obstacle that blocked this vertical rally back in January. And now looking at Bitcoin against the US dollar, well, this is also a market that faces downside pressures. It's currently testing the support area near 79,000 territory, where the 20-day moving average is placed. and that emerged after the price failed to close above the 200-day moving average. That increased the odds for downside movements, and we see the price falling lower. Given the negative trajectory in the technical indicators, the risk is skewed more to the downside. However, for that to happen, we need a clear close below 79,000 in order to target the 74,650 territory where the 50-day moving average is located. Then beyond that, if the sell-off continues, while the price may meet this ascending trend line coming from January near 69,480. Well, now in the positive case that the price manages to move above the 200-day moving average, we may have, the price may also face another tough obstacle between 83,770 and 85,260. That also includes the 38.2% Fibonacci retracement of the downfall that started back in 2025. So that will be important to watch. And in the event that the price manages to violate this bar, we could see a nice rally up to the 90,270 and 93,070, where the 50-day moving up, where the 50% Fibonacci mark is located. So it seems that global markets retain a cautious mood, and perhaps we need the next catalyst to direct us in these markets. In the meantime, the risk, some caution is necessary, but let's see how things will evolve. But that's all from me. Thank you for watching, and wish you have a great trading session. We'll be back on Monday with more technical updates. So wish you have a great trading and good luck. Bye bye for now.